who will be walking us through the strategy of how you can use Elliot Wave Principle to trade stock CFD. All right, Kar Yong is a professional trader who's been featured in several of our live webinars in recent months. He will be discussing how you can establish your trade direction using the principles of impulse and correction, how you can identify entries and exits based on the ABC pattern, and these also touch on stocks that you want to keep in your watch list in 2021. Kar Yong, if you're all set and ready to go, I can hand the reins over to you. Kar Yong?
All right. Okay, so great. Thanks again for the opportunity to be here. Okay. And of course, right, today, if you have yet to register for any account under Phillip Futures or even download the MT5 platform, right, you'll be able to do that via this QR code. And of course, you'll be able to also head on to their website to do that. Okay, so today's topic, we're going to discuss on how you can trade stocks using the Elliott Wave Principle. Okay, and I think that this is something that many people are pretty much interested into looking how they can use technical analysis to time their entry. Okay, and the whole topic about Elliott Wave Principle is where a lot of people, when they first hear about it, they get a bit scared of, or I would say they have the impression that it's very, very complicated. Okay, but today my objective is to really provide you the essence of it so that we want it to be applicable. Okay, so not just about the theory aspect of what Elliott Wave is, but I think more importantly is the practicality of it. Okay, so very quickly, I'll spend about a couple of minutes to quickly introduce myself so that for those of you who are first time here with us, at least understand a little bit about me, my background. Okay, so my name is Kar Yong. I've started trading back in 2012, and since 2015, I've been doing this more or less full time. And since 2015, of course, I've also been going around various cities doing sharing. Okay, and these are just some photos from various events. And of course, over here, wanted to share with you quickly as well some of the results from my own trading and investing, both from the FX market as well as the US stock market. Okay, the idea over here, of course, when I share with you this, is not to compare the results, right? But more importantly, is to allow you to understand that whatever we are covering today is coming from real practical experience that I'm personally involved in the financial market. Okay, so this is my FX result in 2019. Okay, of course, to date is a little bit far off already. Okay, back in 2019. This is my 2020 result. Okay, so obviously there are wins and losses. That's very common in the whole journey of trading. Okay, and this one here is 2021 as of February. Okay, of course, right now we are in almost mid-March, right? So this is up to 2021 this year, February. Okay, this is on the FX side. So I've also been pretty active in the stock market since last year. Okay, so this is basically the result from 2020 until up to date, right? So this is also taken all the way until February this year. Okay, so just wanted to share with you all this so that you know, again, whatever that we are covering today doesn't come from theory stuff, but it's really from practical experience from the financial market itself. Okay, so for those of you who perhaps have yet to connect with me on social media and you'd like to do that, feel free to connect with me. Just all you have to do is just search out my name. Just make sure that it's the right one, because recently I've been receiving a lot of friends telling me that it's like kind of like fake accounts. Okay, so just make sure they are the right one. Okay, so today while we're presenting, okay, I'm pretty sure you will have questions, okay, but don't worry, because we do have a Q&A segment at the end of the presentation. And of course, I've prepared some exercise for you guys to follow along the way. So do participate in them, because I believe that, again, when we talk about learning a new concept, right, the best part to do is to participate in it. And from there, if you really pay attention, being attentive in today's sharing, by the end of today's sharing, you'll be able to look at technical charts very, very differently. Okay, so let's just first start off with the three main objectives that you will take away from today's webinar. First is how to establish trade directional bias. Okay, and I think this is very important, because as a trader or even as an investor, you want to kind of determine whether the probability to the upside is higher or the probability to the downside is higher, right? And that helps to give you a framework, a guidance as to whether you want to buy or you want to focus on selling. Okay, so the first step here is to cover how to establish, how to identify what we call a directional bias using the principles of Elliott Wave. Okay, so we'll cover that, and then of course we'll talk about how you can look out for entries and exit. Of course, with the time limitation, we can't go through all the patterns that Elliott Wave has. So today we'll cover one of it. Okay, and to me, this is like the most commonly used pattern to look up for entries and exit. Okay, and the last part of today's sharing over here, we're gonna share with you my personal watch list. Okay, and of course, this doesn't mean that you definitely want to trade them. It's just that these are some stocks that I'm personally looking at, and ideally, if it fits into your interest, okay, that helps you as well, right? To build up your portfolio, you build up your watch list. Okay, so let's get started by introducing you to the principle of what Elliott Wave is. Okay, so basically whenever I share about Elliott Wave, there's generally, two thought process that majority of the audience would have. One is that they will say, oh, Elliott Wave, I kind of like came across with it, tried it a little bit, but it's just too complex, not for me. And then there's another camp of audience where they would probably say, oh, I heard about it, but I've never tried it. What I heard is it's super complex, okay, and all they know is about 1, 2, 3, 4, 5 ABC. Okay, so a lot of people, when they first come into the world of Elliott Wave, they are familiar with this. Okay, it's all about 1, 2, 3, 4, 5 ABC, and then they start to go into like understanding how to label wave 1, wave 2, wave 3, wave 4, wave 5, how to understand the relationship of Fibonacci with this kind of labeling. Okay, and I fell into that mistake when I was learning Elliott Wave at the start as well. And then that whole process becomes very complicated, okay? And usually, okay, you have like this 3 rules here, right? Like wave 2 never retrace more than wave 1, wave 3 cannot be the shortest, and then wave 4 doesn't overlap, and etc, etc, etc. Okay, now on top of these 3 rules, what you have is like even more complex concepts in Elliott Wave, right? Then you talk about different factors, different degree, you have the primary, intermediate, minute, things like that. Okay, then you talk about different guidelines. Okay, so while there are rules, then sometimes, certain rules can be broken. There will be additional guidelines and things like that. And there are many, many more things, right? And when you put all this together into Elliott Wave, most of the time people will say, I give up. Okay, it's just too complex, it doesn't work. Okay, so I went through that whole cycle so that's why I know most of the time when people come into Elliott Wave wanting to pick up this method of analyzing the chart, they give up very easily because it's just too complex. Okay, but today my role here is to really break down this complex topic into something simple enough yet having the essence of it, so that you are still trading the principles of Elliott Wave, but you do not need to worry about the complexity of it. Okay, so that's the idea of when I trade Elliott Wave, we trade the essence of it. Okay, so again, I always share this, right? It's cool to have your charts labeled with 1, 2, 3, 4, 5 ABC, and then you put it on with different degrees of labeling. It looks cool, honestly, right? But the important part is it's not about the labeling, because as traders, at the end of the day, the end goal, the results that we want is to actually trade and make money, right? So labeling is mainly just helping us to communicate with fellow Elliott Wave traders. Okay, that's all. You don't really need the label if you're trading the market by yourself, right? So today, I don't want you to have the impression that Elliott Wave is all about labeling or Elliott Wave is complex, right? So today, I want you to listen, okay, and of course, learn with kind of an open mind. Okay, so understand the essence. Okay, so when we break the whole principle of Elliott Wave into the fundamentals, the building blocks, essentially, if you look at any technical chart, there are only 2 ways a price can move. Okay, there are only 2 ways a price can move. So if you understand this principle, okay, if you look at any chart, doesn't matter, is it FX, is it stocks, is it commodities, Doesn't matter what time frame it is, there are only these two ways, right? And the first one is we call it an impulse, and the second is what we call a correction. Okay, so in a moment I'll share with you what is an impulse, what is a correction. But basically, this is the fundamental building blocks of Elliott Wave. Okay, so before anyone wants to pick up the concept of labeling, the concept of Fibonacci, okay, in Elliott Wave, you need to first understand what is an impulse, what is a correction. Once you're able to do that, okay, everything else is just simple. Okay, so today we'll focus on giving you this skill set, equipping you with this skill set of how to identify impulse and correction. Okay, so we call this decoding the price move, right? Because again, once you equip yourself with this skill set, you look at technical charts very, very differently after today. Okay, so the idea of impulse here, I'll show you charts and examples, okay? But before that, let's talk about the definition of it. Okay. Impulses are basically price movement that are strong in momentum. Okay, so if you look at the chart, it can be strong momentum to the upside, it can be strong momentum to the downside. Okay, the direction is not so important for now, but first thing here is you need to identify what kind of move is it in the market. Is it strong or is it slow? So if there's a strong momentum move, we call it an impulse. And of course, the opposite is correction, right? Okay, the opposite is when the market is moving very slow, or it's not giving you a very clear sense of direction. It's like a range market, a sideways market. Okay, those are corrections. Those are corrective moves. Okay, so if you take a look at price charts, right, they basically have the price axis and the time axis. Right, so impulses, because they are strong momentum move, it usually take a very short period of time for it to develop. Okay, but for correction, because it's slow, it's sideways, it's going to take a significant period of time. Okay, so on any chart, if you take a look at them, when you understand this two, you try to distinguish these two, impulse and correction, it becomes very clear. Okay, so this one here is a very quick example. Okay, you can see on the screen over here, I have labeled it impulse and correction by rectangle boxes. Okay. So the red color ones are what we call impulse move, and the blue one are the corrections. Okay, so if I were to use my pen over here to kind of help you and draw, okay. Okay, so first off here, very clear. Okay, immediately you take a look at the time axis, right? So this is the duration of this impulse move. Okay, and of course, this is the duration of your corrective move. Okay, so if you just compare these two time that it takes to develop relative to one another, immediately you'll be able to see that this is very, very long. Okay, this is relatively shorter. And not only that, okay, if you actually take a look at the magnitude of price, okay, this development is perhaps about relative to this move down here is about 60%. Okay, so again, from a magnitude point of view, one is strong in momentum, the other is a little bit less. Okay, and vice versa is you take a look at subsequent move. You can see over here, this is very fast, the duration is short. Okay, this one here, you can see the move here is small. Okay, so that itself becomes a correction. Okay, of course, not all charts look so ideal. Okay, but basically right now, before we progress, I think it's very important for all of you who are attending today to at least be able to have the ability to distinguish between impulse and correction. Okay, so over here, I'm going to give you some more example, okay, from charts like this, and then what will happen is I will have some exercise for you guys where I'll flash you some charts, and then all you have to do is just participate, right, to identify whether it's an impulse or correction. Okay, so let's give some example. Let's look at some example first, right? Okay, so if you take a look at this chart here, any chart, doesn't matter what instrument, what time frame, any chart can be distinguished, can be categorized impulse and correction. Okay, so first off, if you take a look at this move here, okay, relatively you can see the momentum to the upside is pretty strong, right? Very obvious is going up. Okay, there's a very clear sense of direction. Okay, and the time it takes to actually move up is not that long, right? So that itself is what we call an impulse. And then after that, you see this is starting to go sideways. Okay, it's not going anywhere, but it's taking quite a bit of time, right? So that itself is what we label as correction. Okay, after that, the move up is very fast, right? So if you just compare relative, this two move here, One is fast, one is slow. So that itself is an impulse, okay? And of course, subsequently, as this is coming down, okay, you can also see that's a very fast move, okay? So that's also an impulse, right? And after that, that is the next move is super clear. That is a correction, okay? In fact, this two move here is like the ideal impulse and correction, right? You can see the time that it took to develop. This is so fast coming down, and this is basically taking its own sweet time to develop, and it's not going anywhere. It's sideways, right? So this is a correction. That is an impulse. Okay. So far, I think it should be clear. Okay, what is the visual aspect of impulse? What is the visual aspect of a correction? Okay. So let's move on to a little bit on the practice side. Okay. So what will happen is that, you know, I will draw out kind of like, you know, the part of this chart. Okay. And I want you to at least practice and, you know, at least answer to yourself. Okay. What is it an impulse or is it a correction? Okay. And of course, if you want to, I would encourage you guys to type your answer into the chat so that I can have a rough idea as well if you guys are getting it. Okay. Usually I run this, most of the time people get it, almost 90% of the people get it. Okay. So very simple. If you think that is an impulse, you put in an I. If you think it's a correction, you put it a C. Okay, so you can type it into the chat, and then from there I'll be able to watch as well. Okay, so first off over here, okay, this part of the chart, okay, I'll give you a couple of seconds. Again, this is not something rocket science. I think it's very straightforward and simple. If you think this move here is considered an impulse, okay, just put in I. If you think this move here is correction, you put in C. Okay, again, don't need to kind of like second guess. The idea here is it needs to be super clear to you. Okay, so usually, you know, within a couple of seconds you should get it. Yeah. So the idea here is let me just do a quick check. Okay, good. So yeah, so some of you might be able to type it in, right? So I'll be able to also check out on that so that I know most of you are getting it right. Okay, give me a moment, right? Let me pull out that, right? So I'm seeing few of you are getting it right. Okay, so Lily type I, you type I, Ricardo impulse, Janice I, yep, right. Ronaldo I, correct. Okay, so basically if you are getting it as an impulse, you get the idea, right? That is an impulse. You guys are getting it. Okay, what about this one here? Okay, again, you compare relatively, right? It should be very straightforward and very easy. Okay, if you think this is an impulse, you put an I. If you think this is correction, you put a C. Okay, good. So Lily's correction, Janice, Ronaldo, you, Evelyn, yep. Okay, Ricardo correction, yep. Okay, so again, it's not something complex. Okay, but don't look down on this simplicity, because as we progress later on in today's webinar, you'll be able to see how just by identifying impulse and correction, it helps you a lot in the chart in terms of analysis. Okay. Now, next one here, okay, I think this should be easy. Okay, if you think this is an impulse, put in I. If you think this is a correction, put in a C. Okay, yeah. Good. Okay, so I'm seeing you guys are typing in impulse, right? Okay, good. All right, so very clear. That is an impulse, right? The momentum to the upside is obvious. Okay, next one, last part of this exercise on this chart. Okay, again, if you look at this move here, if you think this is a very fast move, you put an impulse. If you think this is a slow moving move, you put in a correction. Okay, so important thing here again is don't worry about the direction of the move. Okay, impulse and correction can be up or down. The important element here is ask yourself, how is the price developing, fast or slow? That's all. Okay, if it's fast, it's an impulse. If it's slow, it's a correction. Okay, so I'm seeing Ricardo says correction, Joe says C, Jefferson C. Oh, okay, so Ricardo changed his answer. Okay, Evelyn says C. Okay, now this last piece of move over here, let me bring up my pen. Okay, now this last piece of move here, right? The direction is up. Okay, but again, I want you to not get confused by direction. Okay, so the idea here is ask yourself, how is price moving? Okay, so we always compare relative, right? So over here in the same chart, you can see this is very fast, this is very fast, this is very fast. Okay, and you want to ask yourself, how is this developing? Okay, compared to like this part here, right? So you realize that yes, this is going up, but it's not going up very fast, right? It's going up, up and down, up and down, up and down. It's a very choppy move, right? So actually, what you want to then identify is that this last piece of the chart, in fact, is a correction, right? It's slow. It's yes going up, but it's not fast. Okay, so that itself we labeled it as a correction. Okay, so hope that clears off some misunderstanding, or maybe it helps to clarify a little bit more in terms of the concept of it. Okay, so that's a correction. Okay, I'll give you a little bit more exercise. This is another one. Okay, this should be quite straightforward and easier compared to like the other one just now. Okay, so over here, first part of this chart that I've boxed up. Okay, if you think it's an impulse, you put an I. If you think this is a correction, you put a C. Okay, this should be straightforward, right? It shouldn't be. Everyone should get it correct. Okay, so I see. Yep. Okay, Janice says I, you says I, Lily I, Jefferson I. Okay, so Yong also I. Okay, good. Everyone who is typing in is getting it correct. Okay, so yes, this is an impulse. Very fast, very obvious move to the upside, right? What about this? Okay, I think this should be very clear, right? Yep. So I'm seeing you guys are typing in C, which is correction. Okay, good. So all of you are getting it right. Okay, so in fact, you realize that even if this is the first time you kind of hear of this principle and concept, it's easy, right? Okay, but again, I mentioned don't look down on it, because we're gonna piece these two together, and you realize that understanding a technical chart is not that difficult. Okay, what about this? The last two part of the chart, right? Yep. So this is impulse, right? So you guys are typing in I, correct. Okay, very, very clear and strong move to the downside, right? And last piece over here, okay, this piece here, yep, okay, so I'm seeing correction, correction, correction. Good. Okay, so in fact, I think this concept of impulse and correction should be, you guys should be familiar with it. Very clear cut, very obvious. Okay, now with that, okay, why I want to give you this opportunity to practice is really to, number one, build the confidence within this webinar itself, and with that you'll be able to acquire the skill set. Now, why is identifying impulse and correction so important? Is because that is really the essence of Elliott Wave. And once you're able to distinguish these two moves, okay, what you can do next is very powerful. Okay, and that's what we call establishing your directional bias. Okay, now over here, once you're able to do that, right, there are essentially only three categories of how prices can develop in a technical chart. Okay, again, doesn't matter what instrument, what asset, what time frame, this principle applies. Okay, so there are only three big categories. Okay, so the first one here is what we call impulse then correction. Basically, you combine an impulse move followed by a correction. Okay, so that's the first category. Okay, I'll show you some examples along the way. The second category is what we call impulse then impulse. Basically, you put two impulses together. Okay, and the third category is what we call impulse then crawl. Okay, now crawl is just another name that I kind of like put in so that we want to differentiate what is a correction combination and a crawl combination. Okay, but I'll show you example so that you get very familiar with it. Okay, so these are the three combinations, and if you look at any technical chart, this is how the development of price chart is going to be. Okay, these are the three categories it can develop. Okay, there isn't really any others, right? So these are the three. Okay, so let's take a look at what this tree looks like. Okay, and then we'll go into some charts as well. So the first category here is impulse then correction. Okay, basically over here I do have some illustration. It means that you have a very strong move to the upside, which is an impulse, and then you take the correction piece and you put them there. Okay, so it's basically imagining like zigzag puzzle pieces. Okay, so you mix and match, right? So this first category is you take an impulse piece plus a correction piece, you put them together. Okay, and when you see something like this, okay, when you see this combination of an impulse and correction, there will be a 60 to 70% chance, okay, the price will continue to the upside. Okay, so remember this combination because again, it can be very powerful to help you in your analysis process. Whenever you see something like this on the chart, there's about 60 to 70% of the time the market will continue going up. Okay, so this is the first combination, right? Of course, if you flip it, you will have the downside as well. Okay, so again, don't worry about the direction. That's why I say focus on identifying what is impulse and correction. Okay, and then when you piece them together, that's where you get this first combination. Okay, now it's not going to be 100%. There's no such thing that you're going to get 100% accuracy in the market. Okay, but when you're able to look at this combination here, you have a good 60 to 70% of the time you get it right. Okay, and as traders, that is more than enough. Okay, 60 to 70% accuracy is sufficient for you to actually trade and make money. Now, the second combination is pretty clear-cut and simple. This is what we call impulse. For me, I would just call this kind V-shape. Okay, because why? They look like V-shape, right? So what you have here is, either an inverted V or V shape is basically two impulses joining one another, right? Following one another. When you see something like this on your chart, okay, the idea here is do not trade it. Okay, in other words, when you see a V-shaped formation with the latest price chart, right, you see a V-shape, just stay out of it. Okay, don't go and trade the market when you see a V-shape. Okay, so this is quite straightforward, right? Easy. The last one here is where some of you might get a little bit confusing, right? So let me elaborate on that. Okay, this is what we call impulse then crawl. Okay, but essentially is a corrective move here, and then you get an impulse move here. Okay, but the difference is this is what we call a crawl. Is just to distinguish the difference between this and this. Okay, so one of this here, both of it is corrective at the end of it, right? It's just that one of it is coming down, one of it is going up. That's all. Okay, that's why I just have another name. But basically, the crawl is also very slow in itself, right? The development of it is slow. Okay, so the idea here is when you see something like this, okay, when you see like an impulse, a very strong momentum to the upside, and then after that price starts to slow down, what it's telling you is that there is a lack of momentum to the upside already. The energy level is not there anymore. There's a higher chance this will come down. Okay, so same thing whenever you see this combination here, there's a good 60 to 70% of time price will fall. Okay, and of course if you flip it, you have the opposite direction, right? A very strong move to the downside followed by a crawl, a slowing down move, then you know, okay, there's a very high chance price will reverse. Okay, so in any technical chart, right, you will be able to kind of like put these three categories in. Okay, and you will see for yourself, based on the probability, you have a high chance you get the direction right. Okay, and that's actually, this whole thing comes from Elliot Wave itself, just that we take all the labeling, take all the complexity out of it, we recognize the essence of it. Okay, so over here, let me bring you, give you this example, okay, on some actual chart. Okay, this is an impulse followed by a correction. And then when you see this combination, there's a higher chance to the upside. Okay, so what happened next is, of course, price just keep going up. Okay, of course, I'll need to kind of put a disclaimer here. These examples that you see in the slides are, of course, very ideal, very clear example, because when you're learning it, I think it's important to find examples that are clear and ideal, right? But when you're actually trading it, I need to share with you that it's not going to happen like exactly like this all the time. Okay, again, it's about 60 to 70% of the time this will happen. Okay, let's give another example over here. This is what we call a crawl. Okay, so you can see the slight difference between impulse, correction, and impulse and crawl. Okay, so same thing, price has been coming down, and then it starts to develop a very slow move, right? Every time you see something like this, there's a good chance it will reverse to the upside. Okay, so this is a little bit example on actual charts. Okay, this is another example on opposite direction. Okay, this one here you see an impulse push, and then after that a very slow move to the upside, right? So that's a crawl. There's a high chance this will come back down. Okay, so from here, okay, I want to give you again some exercise, some practice. Okay, and all you really have to do again is to apply that principle of that tree combination. Okay, so if you see the first combination, which is impulse correction, you either buy or sell, right, depending on the direction of it. Okay, if you see a V-shaped formation, which is impulse, then you don't trade. Okay, and the last one here is, of course, if you see a crawl, depending on the direction of the crawl, you either buy or sell. Okay, so very simple. I want you to imagine that today I'm going to show you some charts. Okay, and I want you to make the decision on whether you're going to buy or you're going to sell. Okay, and of course, ideally, I would say most of you will get it right most of the time. Okay, and that's really part of trading, right? You do not need to get every trade right, but as long as you have majority of your decision getting right, you make money from it. Okay, so let's start off with the very first part of this chart. Okay, and this is exactly what you see on the chart right now. Okay, and I want you to make the decision if you are buying, selling, or no trade. Okay, so very simple. If you are, you look at the chart and you say I want to buy, you put in a B. Okay, if you say that I look at this chart, I feel like I want to sell it, you put an S. Okay, and if you say that I better not trade, you put an X. Okay, so very simple, right? So let me take a look quickly. What are some of the decisions that you guys have, right? So I'm saying Ricardo buy, Ronaldo buy, Young buy, okay, you buy, Jefferson buy, Evelyn buy. Okay, I think almost everyone is buying. Good. Okay, Clifford is buying, Jenny is buying, Lily is buying. Okay, good. So every one of you decided to buy, and again, why? Very straightforward, because you are seeing this combination, right? Impulse followed by a correction. Okay, and in fact, what happened next is price just shoot up. Okay, so in fact, all of you who typed it in just now, who bought it, you got it right. Okay, again, but don't get too overconfident. Okay, this is just based on probability. Most of the time, it does happen like that. Okay, so from here, okay, so you get a very good impulse push to the upside, right? This is an impulse move. Okay, so at the end of an impulse, which in this case, this is exactly what you see right now with this impulse here, you do not want to trade because you do not have a proper combination. Okay, in other words, based on Elliott Wave Principle, if you just see a strong push like that, if you just see an impulse, don't trade it. Okay, you need more information. Okay, so leave it. And then what happened next? Let's take a look. Okay, this happened. Okay, so you want to ask yourself right now, what combination are you seeing in the market? Is this an impulse followed by correction, impulse followed by crawl, or is this impulse and impulse? Okay, so again, at this point in time, okay, let's say you have an opportunity to make a decision whether to buy or sell. Okay, what would you do? Okay, again, don't overcomplicate it. Just look at this. Within a couple of seconds, you should be able to quickly determine the direction that you want to focus on. Okay, good. So I'm seeing you guys are typing in SSS sell. Okay, we have Lily buying. Okay, so majority of you are selling. Okay, so in fact, most of you are getting it right. Okay, so this is what happened next. Okay, again, why sell? Because you see this combination of impulse, and then you want to ask yourself, how is this moving? Right? It's pretty much very slow, right? It's choppy itself. That's a corrective in nature, and there's a higher chance this will reverse. Okay, and in fact, you guys, most of you actually got it right. Okay, and you realize that the move to the downside is an impulse one. Okay, which means that if you actually sold it, it's a very easy trade because almost immediately in a very short period of time, you already start to see the profits coming in. Okay, that's the idea behind it. So again, if you just see an impulse like that, don't trade. Okay, never trade when the market is very strong in an impulse move. Okay, so give you the next chance. Okay, and look at this. What does it look like? Okay, is it an impulse correction, impulse, or is it an impulse crawl? Okay, and if this is the decision, this is the opportunity, what would you do? Would you buy, would you sell, or would you not trade it? Okay, so good. So I see buy. Clifford is not trading. Okay, that's perfectly fine, right? In the market, if you're not clear of something, you just stay out of it, right? But other than that, most of you are buying, okay, which is good, right? Because again, what is this combination is impulse and then the crop. Okay, so this is what happened next. Price just go up. Okay, now over here you can see that the first push was pretty much a strong move. Okay, which is good, right? What you want is an impulse. You want to trade the move to the upside quick, right? And then after that, what happened? You can see over here. Okay, it starts to slow down, right? So again, what combination is this? Okay, again, this is a very clear combination, right? You want to ask yourself, how is price doing? It's slow, okay? So that becomes what we call a correction. Okay, so good. Okay, so if this is given to you as an opportunity to execute some trade, what would you do? Would you buy, would you sell, or would you not trade? Okay, so I'm saying Ronaldo is selling, Young is selling, Janice is selling. Okay, good, good. Lily not trading. Okay, that's again perfectly fine. If you feel that it's not clear enough for you, you don't trade. Okay, so Jefferson is also not trading. Okay, but majority of you are typing in sell, right? Which is great. Okay, because idea here is this combination give you a higher probability that it will reverse. Okay, and this is what happened, right? Okay, so price came down. Okay, and of course, at the end of this impulse, you don't trade. Okay, now what happens if next thing price does this? Okay, so what combination are you getting? You want to ask yourself, right? After the impulse drop, how did price continue to develop? Okay, now if given this opportunity, what will you do? Will you buy, will you sell, or will you not trade? Okay, I think this is pretty clear cut, right? So Rolando is selling. Okay, Rafael is selling, Evelyn is selling, Lily is buying. Okay, May is buying. Okay, maybe we need to address a little bit on this. Okay, but most of you are here typing in sell, right? Clifford sell, Janice sell. Okay, there are a few of you buying. Okay, so let me explain this, right? I think it's important that. Okay, first off, you want to ask yourself. Okay, let me draw it in. This is a very strong move. I think all of you can agree with that. Okay, next part here, you want to ask yourself, how is price developing here, right? Is it fast? Is it slow? And obviously, in terms of comparison, okay, let me change my color a bit. Okay, in terms of comparison, you can see this is fast. Okay, this is slow. Okay, so what kind of combination are you seeing? You're actually seeing an impulse followed by a correction, right? It looks like that. Okay, if you still remember how the illustration looked like. Now, when you see a combination like that, there's actually a higher probability this will come down. Okay, of course, not 100% of the time, but there's a high chance it will come down. Okay, so actually, if you look at something like this on the chart, you will want to focus on sell. Okay, the direction you want to focus on is sell. Okay, and this is what happened, right? So price actually came down pretty much as if it's an impulse, right? Very strong move to the downside. All right, so now, so for those of you who actually wrote buy, right, I hope by sharing with you and elaborating a little bit more, I hope you get it why we are looking at sell. Okay, of course, we are not going to be right all the time, but just wanted to really give you that higher probability of picking the direction right. Okay, now, what about this? Okay, so after you see an impulse push, you basically do not want to trade. Right? Anyway, this is what I want to share with you. This is a V shape here. Okay, so you see an impulse combination, you see a V shape, you basically don't trade. Okay, after that, you see this move. Okay, now this part, again, not all charts are going to be ideal and like nice looking. Okay, sometimes you see something like this and you'll be questioning yourself and say that, okay, what kind of move is this, right? Looks like it's a bit not clear. Okay, and I want you to be perfectly fine as a trader looking at a chart and say that this is not clear, I do not want to trade it. Okay, I want you to be perfectly fine with that. Okay, because not all charts, not all the time you're going to get an opportunity to trade. In fact, if you take a look at this, this is more like V shape, V shape, V shapes. Okay, so can you see a lot of V shape combination over here? If you see that, don't trade it. Okay, again, we don't trade when we see the V shape. Okay, so hope it's clear, right? So this message here, the importance of this part of the chart is important. Okay, after that, what happens? Okay, if you see something like this, right? So you get a V shape, and then after that, this is an impulse, and this starts to go sideways. Okay, so if you're given this opportunity for this very last trade, what would you do? Would you buy or would you sell, or would you still say, oh, I better stay out of it? Okay, so I want you to type that in, right? With this last opportunity over here, what will you do given this opportunity, right? Will you focus on buy, sell, or X, no trade? Okay, so good. Seeing Ronaldo buying, Janice buying, Jefferson buying, good. Okay, so we have few of you putting in the X, which means you do not want to trade. Okay, it's perfectly fine. Okay, so now last part of this chart here. Okay, basically the market keeps going up. Okay, why? Because you get a very small correction. Okay, so that's how it looks like, right? So again, the idea of this practice here is to give you the chance to kind of imagine if you come into the chart and then you see something, you saw a combination, and then how will you focus your direction on? Okay, in fact, we have walked through this whole chart, right? But okay, now I want you to see in terms of, okay, it looks chaotic. Now let's say we strip everything and I show you this chart without giving you the walkthrough that we have done today. okay, at the earlier part of this presentation, and then you just look at this chart, most of you would look at it and say that, wow, that's very complex, right? I have no idea what's happening in the market. Okay, but I want you to see that just based on the principle of what is an impulse, what is a correction, and then we start to piece them together, you can actually decode this entire chart. Okay, and in fact, you have been trading this entire movement here, and most of you are in fact making money of it, right? Out of, let's say, a couple of trades, you get most of it, majority of it right. Okay, and that's how, you know, is great already, right? You are able to make money from it. Okay, so I want you to be able to see that. Okay, at the end of the day, that's how the market develops, right? Any chart, any time frame, that's how it works. Okay, of course, that's not going to be 100%, as I always say. Okay, so you need to know that it's high probability, it's not certainty. Okay, so I hope that's clear. Okay, so that is important. Why I spend so much time in this webinar here talking about that is because as a trader, the first thing you need to determine is the focus of your direction, whether you want to buy or sell. Okay, that's the most important thing to get it right first. With that determined, so when you look at the chart, you have decided, okay, I want to buy, I want to sell. You have your directional bias set. Then, of course, the next thing here is to look at execution. Okay, where to enter, where to put your stop, where to put your target. Okay, so today over here, of course, we won't be able to go through like a lot of strategies to execute the trade, but over here we will focus on one for today. Okay, so again, there are many methods, many strategies to get involved in. Okay, just to name you a few, some of you actually use like breakout strategies, right? Some of you might use a pullback strategy. Some of you might look into candlestick formation. Okay, some of you might add in various indicators to help you time your execution. Again, there's no right or wrong. Okay, so there's no such thing as like what is the best, most profitable way to trade. There's no such thing. Okay, you need to eventually find one that fits your style. Okay, so the idea here again today, I'll introduce to you one simple yet effective way, but does not mean that this will fit every one of you. Okay, this is a method, an execution method that I personally use. Okay, I find it very effective. I like it. Okay, but of course it doesn't mean that it's gonna be good for everyone. Okay, so let's focus on that today. Okay, so today this method here, we call it the ABC setup. Okay, and essentially how it looks like is basically the combination of impulse then correction. Okay, so over here let me bring you to an example. Okay, so we'll use the US stock market today because we focus on that, but again, Elliot Wave Principle is a technical analysis methodology. You can apply it into commodities, you can apply it into the FX market as well. Okay, but today we'll focus mainly using examples on the US stock market. Okay, now this is a historical chart. Okay, but I want to bring out some like ideal example again to showcase to you first, and then after that we'll walk you through some live charts, you know, and guide you through in terms of the entire process and analysis. Okay, so this is actually Zoom. Okay, I think all of you would be familiar with this company. Okay, it's Zoom. So first thing off is, of course, you need to determine your direction, right? Okay, so on this chart here, can you see this is a very clear impulse? Let me change the color. Okay, this one here, you can clearly see this is an impulse, and then of course this is developing a slow correction, right? So this is the combination. Again, the first step is not to immediately look at the chart and say where to buy or where to sell. The first step is to ask yourself, do you want to focus on buying or do you want to focus on selling, or do you not want to trade? Okay, so directional bias always come first. So if you look at this combination, you know, okay, this is a pattern, a combination that I recognize, and I know there's a high chance this will go up. Okay, so immediately I have a bias. I would say I want to focus on buying. Then only you come to the part where you want to ask yourself where to buy, right? Now that I know I want to buy, the question is where to buy, which price to enter, when to enter. Okay, so this is where we'll talk about the ABC setup. Okay, now over here, this looks similar like this, right? So the direction here, we're focusing on buy. Okay, so the ABC setup looks like that. Okay, so of course, let me maybe go back a little bit. Okay, now over here, you can see from this top, the correction starts to form with a move of one move down, one move up, and then this move starting to come down. Okay, so essentially, if you go and count what we call swings, right? So you can see this is one down, one up, one down. Okay, so in total, there are 3 swings within this. Okay, and because there's 3, you can actually put it as A, B, and of course the third one here is C. Okay, so that's how it's being done, right? A, B, C, you have 3 moves. Okay, so from here, that's where, let me bring back the slides. Okay, so this is where you see that A down, B up, C down. Okay, 3 moves. Okay, and what you see over here, of course, is a Fibonacci ratios. Okay, now again, today we might not go into detail of like everything about Fibonacci. That would take up maybe another sharing session. Okay, but this ratios here that we're looking at is what we call Fibonacci expansion. Okay, and to make things very simple and straightforward for you to understand, what we are measuring is basically we are taking reference from this move down. Okay, so we are taking reference of A, and then what we want to do is we want to find out the equal leg of it. Okay, so if give you some numbers, right? Let's say from this high to this low, it's 100 units. Okay, what we want to do is just take from B and find out 100 units, where would it end up with? That's about it. Okay, equal move. Okay, and that's what this ratio is telling us, right? So 100% means it's equal. 1 is to 1. Okay, and usually, okay, again, nothing is 100%, but usually if this is ABC is a correction, you will see a reaction from here and starts to go back up. Okay, most of the time that will happen. Okay, so with that understanding, our entry will then be at the 100%, and you can see this is again ideal, classic. Okay, how Zoom actually reacted off that level and then just shoot up. Okay, and again, this is an impulse, right? And that's what you want to be involved in as a trader, because imagine you just enter here and then within the short period of time, you start to see that profit coming in. Psychologically, emotionally, very easy to handle, right? Because it's always nice to look at profits, right? So that's the idea. Why? Okay, again, all these are elements of Elliott Wave. Okay, but we only take a very small part to do labeling. That's it. Okay, hope you can see that part, right? So again, this is classic example. Not gonna happen all the time, but I need a perfect example to showcase to you so that you can understand the principle first. Okay, so let's take a look at some understanding, right? Then we'll go into like the charts, and then I'll be opening up for you to even ask like some stocks if you need some analysis. I'll be able to do it like live together with you in this session. Okay, but let's walk through the 3 steps execution first, right? So to trade this ABC, very simple. First is, of course, we talk about identify your directional bias. Okay, you need to have this first. Doesn't matter what method of execution. The first one is to determine your direction. Okay, then you start to look for an ABC, right? ABC, again, just like I show you on the chart on Zoom, is 3 move. That's the ABC. Okay, you need 1, 2, 3, ABC, 3 move. Okay, and then from there, you key in, or typo, right? Key in your entry and stops. Okay, so over here, you might want to have all this in. Okay, we are using 100% Fibonacci for entry. Okay, let me put this in. Okay, 100% for entry, right? So this one here, we are using Fibonacci ratios. Okay, this is again 1:1, equal move. Okay, so that's what we meant. We are using 106.18 for our stop loss. Okay, and our target here we are using 127. Okay, I'll show you in live charts as well how this is being done. Okay, but you might want to then now quickly, just take a screenshot of this, so that you have reference to this if you need to. Okay. So entry at 100%, stop at 161.8, and of course target here we use 127.2 as a guide, as a framework. Okay, so now let's take a look back at the Zoom example. Okay, so you can see over here, this is your 100%, that's where your entry is. Okay, so we are using this equal move. Okay, measure A, map it into here, that's your 100%, that's the equal move. That's where your entry is. Your stop loss is going to be the 161.8. Okay, again, this is just basically the measuring tool, right? The ratios of it. And the target here, we are using 127. Let me clean up a little bit. We are using 127 of here to here. Okay, so again, this is Fibonacci ratios again, right? Basically, the idea is we take this high, the start of the ABC pattern and the completion of the ABC pattern, and then we project the 127. Okay, to give you some number, basically what it means is that if this here, okay, this height of A to C is 100 units, okay, this projection up is about 127 units. That's how ratios work. Okay, again, don't get confused of all this. I'll show you in a moment how I pull it, how to measure all this. Okay, but at least for now, understand where we look for entry, where we look for stops, where we look for target. Okay, yeah. So I hope so far is clear on all this. Okay, now with that, give you an example. Okay, this is ticker symbol ABBV. Okay, I think this is a pretty popular company in the US. But of course, depending on whether you are familiar with the US market, okay, some of you might hear about this company before, some of you might not. Okay, but basically is a huge company. Okay, so ABBV ticker symbol. If you take a look at this chart, okay, this is like the latest updated chart, right? This is currently one of the stocks that I'm looking out for. Okay, now if you take a look at this again, the first step to walk you through is to identify the directional bias. Okay, and we have that pretty clear, right? This is a very strong move to the upside. This is going sideways. We get that impulse, then correction combination. We know, okay, probability is to the upside. So my direction bias is immediately, okay, I want to focus on buy. Then once I decide that I want to buy, the next part of it is where to buy, when to buy. Okay, and that's where the ABC setup comes in. Okay, so over here, this is how it looks like. Okay, maybe I'll go over to the live chart to walk you through this. Okay, but use this a little bit first, right? So you can see over here, this is the recent top. Okay, this is the low, one swing down, one swing up, and then of course we expect another swing down, right? So this is where you have your A, your B, and of course this is where we look at C, right? 100%. That's the entry, right? Of course 6.8 is a stop, and then the target as of now is using this high here, and the entry we measure this. Okay, so that's how we get it. Okay, of course I can't show you what will happen. Okay, this is as of now, so it haven't really happened, but this is a trade that I'm personally looking out for. Okay, so let me go over to the chart and show you, okay, so that you can see how that's being done. Okay, so give me a moment. Okay, let me bring up that chart. Okay, let me clear off everything. Okay, so again, this example here we are looking at is on 4 hour, right? Of course, we can look at daily as well. Okay, what I do, okay, is always focus on the most recent development. That's the most important part of the chart, right? And over here, again, you can see, right, impulse, correction. So we are interested to buy. The question is when to buy, okay? So from this chart here, you can see this is the recent top, this is the recent bottom, okay? This is the next move. So you have 1, 2, and then you expect the third one, right? So ABC setup, okay? So how I do is I'll use my Fibonacci extension, okay? And what I do is I just pull it from this point here, the top, okay, to the second, to this bottom, to the second point, and then to the third point here. Okay, I'll take away that 127 so it becomes clearer. Okay, and then that's where you get your Fibonacci ratios, right? Again, I mentioned this here, basically you're measuring equal move. So if this is coming down 100 units, then essentially over here is equal 100 units. Okay, that's how you get your entry and your stop. Okay, now in terms of target, then what you do is you use your Fibonacci retracement. You pull it from this top here to where your entry is gonna be, and of course you need to go and put in that 127 ratio. Okay, and with that you have a very clear entry, target, stop loss. Okay, so over here you can see this is how you're gonna look at it. Okay, this is the risk that you have. Okay, maybe I'll just quickly put this in and give you see the risk to reward ratio. Okay, so on this trade here, the risk to reward ratio is close to 2.5. Okay, so it's decent, right? Because if today you have a hit rate of, let's say, 60%, out of 10 trades, 6 get it right, 4 get it wrong. Okay, with a risk to reward of 2.5, which means that every dollar of risk you put in, you're making potentially $2.50. With a 60% hit rate, you're making good money. Okay, and of course over here you can even extend your target, right? Because some of you maybe you want to turn a trade into a long-term investment, you want to scale in, you want to just maybe trail your stop, you know, to write as much as you can. That's possible as well. Okay, so again, this is just a framework. Don't take it as like, oh, this is the holy grail. There's no such thing. Okay, just wanted to show you that guideline. Okay, I also hope that's clear. Okay, so with that, okay, that's how basically it's simple, but at the same time is effective. Okay, I think that's something you want to take away with. Okay, and over here, very quickly to show you, okay, all the charts that, or I'll say all the stocks that in my watch list that I have. Of course, these are not, you know, like extensive, okay, which means that I'm not only looking at this, but these are the stocks that will be interested for trading, okay, which means that the volatility is there, the momentum is there, it's ideal for trading. Okay, if you're looking for maybe investing, whether it's a value investing, dividend investing, I think then that's another portfolio, right? So again, I want you to know that this is not extensive, which means that I have more stocks that perhaps is for dividend, is for value. Okay, these are mainly for trades. Okay, because the momentum is there, the volatility is there. Okay, so again, some of these companies here you might already be familiar with it, okay, because they are popular. Some of it maybe you never really hear about, you don't even know the ticker symbol of it. But you can screenshot and then, you know, see if it fits into your trading portfolio, right? So I think like Moderna, this one here, Micron, okay, this is AMAT, okay, Applied Materials, I think it's pretty popular as well. I think Tesla, all of you knows about it, right? Okay, Intel, okay, I think also pretty common. MAR is basically Marriott. Okay, again, company names that is not foreign. Okay, and of course Baidu here, I think a lot of people also know about it, right? BIDU is Baidu. Okay, so you can take a screenshot, go and check out all these charts. Of course, it doesn't mean that these are the charts that have a setup. Okay, these are just in the watch list, which means that you might want to maybe give it a little bit of time to go and monitor it. Okay, and if of course there's a valid setup, then that's how you can trade it. Yeah, so I hope that's clear. Good. Okay. Okay, so I hope so far it's clear. Right now, maybe I'll open up, you know, for Q&A. Okay, and see if you guys have any questions that you want to clarify, and then I'll be able to address them. Okay. Okay, so I see first question here from Janice. Okay, is it correct that Elliott Wave is usually for swing trades, but we can turn that position into long-term position? Yeah. Okay. To answer Janice's question, I think it's a very good question. You know, in terms of technical analysis, right? So understand that Elliott Wave is also part of technical analysis. You look at the technical charts, okay, to make some decision, right? So any technical analysis basically is fractal in nature, which means that you can apply it in a very short term, you can apply it in longer term, you can even apply it for like investment ideas. Okay, so over here, of course, you can enter a trade based on, let's say, a 1 hour chart. Okay, and then from there you turn that into a long-term trade idea. Okay, that's definitely possible, right? And then all you need to do is just manage your stop, trail your stops, and then that's how it's being done. Okay, so hope I answer your question, right? So you can use it for short term, you can use it for long term, you can even combine it, right? You enter a trade on a short term and then you turn that into a long term position. Okay, so give you some example, right? Like for example, I actually have a position on Intel. Okay, so it's my idea of Intel is a long term play, right? Because it pays off dividend. Okay, and what I did was I used the technical Elliott wave to enter, right? Because a lot of people when they have in mind like, oh, if that's a investing position, if that's for value investing or that's for dividend investing, then what they do is they just focus on the fundamental side of things, and then they kind of like buy whenever the valuation says okay it's cheap enough, and then they buy, and then that's about it, right? But today with the knowledge of technical analysis with Elliott Wave Principle, you'll be able to combine them. Okay, and that's how I do it, right? I know that the fundamental of this company is solid. I would like to buy into it, so I have a directional bias, right? So again, the bias, the direction is clear. I have a directional bias. I want to buy it, okay, because it's a strong company, it's a good company. But what I need then is to tie my entry, my execution. That's where the technical analysis comes in. That's where Elliott Wave Principle comes in. Okay, so that itself is from a trade, it turns into a long-term position. Okay, that can happen. Good. I hope it clarifies, right? Another question from Janice: is there a time period to wait for target price to be met? Some say swing trade should only be around 3 to 5 days. If target price is not met, we should exit the position and look for new opportunity. Again, very good question here, but it really boils down to your style, your plan, okay, your trade plan, right? Your strategy itself. Some traders does what you say, okay, which means that they have a time target. Okay, basically says, okay, if within a week it doesn't hit my target, I will just exit that trade wherever price is. Okay, you can do that, but at the same time, you want to also understand that sometimes the market just don't move. Okay, but doesn't mean that if it doesn't move, you're in a lousy position, right? Okay, so there's no right or wrong, but for me, I don't have a time stop, okay, which means that if I'm looking to buy, I got in and the price just don't move, but the Elliott wave analysis still tell me that the probability is due to the upside. What I'll do is I'll just hold on to the trade. Okay, that's how I do it. Okay, but doesn't mean that you can't do it other way. Okay, just want you to know that you can like do what you just said. Basically, have a time period when it doesn't hit your target, you exit. But at the same time, you also need to know that because of that, maybe you're giving away some potential profits, right? Okay, because of the time period. Maybe you exit after 5 days and then the market starts to take off. You might miss out on that. Okay, so I hope that answer to the question is clear. Okay, any other questions that you guys have? You'll be able to now type it into the question box, right? And then from there, I'll be able to look at your questions and answer them. Okay. If not, I hope so far this entire presentation is clear, right? Okay, maybe the little bit part of the work that you need to do is go and find out, or if you're not familiar with Fibonacci, you probably need to spend a bit of time to go and understand how to utilize the Fibonacci that we talk about. Okay, but of course today I won't be able to go like in depth onto all that because it will take up maybe more time, right? So today focus is more like the Elliott Wave Principle of it. Good. Any more questions that you guys have? All good? Okay. May has a question. Long-term investing use weekly chart. May, to answer your question, I don't really use the weekly chart. I think it's just too long. Okay. The highest time frame I go is daily. Okay, and I think that's more than enough. Okay, so even if you're looking for long-term investing, right? You use a daily time frame, you execute a trade, and it takes off. You just hold on to it, right? So if you're looking at weekly chart, basically your stops you need to put pretty wide. Okay, so my suggestion here is as a retail trader, just focus on maximum time frame is daily. You don't really need to go beyond that. Okay, so daily chart is more than enough. Joe asks, can you analyze straights trading? Okay, give me a moment. Let me open up the chart. Okay, give me a moment. Let me open up my chart here. Okay, I believe you, Joe, when you are talking about straights trading, you are referring to STI, right? Okay, let me go over. Let me look at that chart. Good. Okay, give me a moment. Let me. Okay, I'll utilize. Okay, I think you can see my screen now, right? Okay, so let's talk about straight line there. So I assume that Joe, you're referring to the Singapore market. Okay, so I'm using this here on NT5 platform. Okay, so you do see the RSI indicator, but let me just remove it. I really don't need that for now. Okay, so now first thing off, doesn't matter what instrument, right? Again, you always ask yourself this: what is price doing at the most recent development? Okay, which is in this case here, right? And okay, so maybe I'll give you a quick few seconds, right? You guys practice that. Okay, so right now apply it into actual live market. Okay, maybe we look at daily chart. Okay, let me bring this back. Okay, look at daily chart, right? And ask yourself this question. Okay, how is price developing recently? Okay, any combinations that you can see that looks familiar? Okay, so you realize why I give you guys that practice period, because again, it's important, right? Right now, it's just basically putting that into whatever instrument, whatever market you want to see. Okay, so first off, can you see that this move up is corrective in nature? Okay, this here is strong in impulse. Okay, and again, once you identify this, your directional bias is very, very clear. Okay, this tells you there's a higher chance this will come down. Okay, so when you have a directional bias, then you know, okay, the focus here is maybe downside. Okay, instead of buying, maybe selling. Okay, but of course, if you're a long-term investor, then you wouldn't want to sell, right? But then what this helps you to do is to tell you, okay, maybe right now don't buy first. Okay, or maybe if you want to buy cautiously, because if this were to come down, then you want to wait for it to drop, and then you can enter at a much better price. Okay, so maybe I'll give you a little bit more detailed analysis. Okay, since you asked about this, and I believe most of you are probably still interested in the Singapore STI market as well, right? Okay, now over here, one key zone you want to really keep an eye on is somewhere around this area. Okay, if I would draw in a box somewhere there. Okay, there's a high chance price will come down towards this zone. Okay, somewhere around 327 to 31 or 320. Okay, so 320 to 327. Okay, there's a high chance price will actually come down towards that zone. Okay, not 100%, but there's a very high probability. Again, why I say that, because this is the combinations that we are seeing right now. Okay, an impulse and then a crawl. There are 60 to 70% of the time this will happen. Okay, so just keep an eye on that. Okay, this is basically the Singapore index, but you know, you can reference that to STI as well. Okay, so hope that's clear, right? Again, keep an eye on 320 to 327. Okay, that's the level that you want to pay attention to. There's a high chance price will go there. Okay, okay, so Joe, I hope that's clear. Ricardo asks, after the impulse wave going down, then correction, is it a buy or sell? Okay, so Ricardo, to answer your question, you need to determine whether the correction is a crawl or is it a correction. Okay, give you maybe I need to go back to the drawing board, right? Okay, I'll draw it on this empty screen here, empty part of the screen, right? So the idea is this. Okay, if you see an impulse down, okay, and if the correction looks like that, okay, this is telling you there's a higher chance this will come down. Okay, but if you're referring to, let's say, another one, okay, an impulse down, and then the correction is a slow move that continue to go down, then this is what we call a crawl. Okay, when you see something like this, there's a high chance this will bounce up. Okay, so I hope you know this helps to clarify that. Okay, depending on the correction you're referring to, is it a crawl or is it a correction? Yeah, so that's the idea behind it. Again, it's not about 100%, it's not about certainty, but you want to play around with the probability of it. Okay, so there's about 60 to 70% of the time you get it right. Okay, May ask about Alibaba. Okay, let's see if I can pull that out. Okay, we might not have the chart here. Let's take a look at the other one, CBX. CBX also not really here. Okay, I'll borrow the chart on trading view for now. Okay, just to quickly walk you through that process. Okay, again, we'll keep things pretty simple over here, right? Okay, now just take a look at this chart here and let's stick to daily, right? Ask yourself what is happening right now. Okay, so the clearest move that you can see, of course, this is coming down very, very strong, right? It's an impulse move to the downside, right? So from there, you need to give it some time. Okay, again, we are looking at daily, right? You need to give it some time and see how it's going to develop here. What is it likely going to develop? Okay, so of course, if you can, you can go down to like even lower time frame, okay, and look at what's happening. Okay, so let's say 4-hour time frame here. Of course, right now it's not enough data to analyze it, but you can see that this starts to maybe slow down a little bit. Okay, and if that happens, then of course you get a very clear combination. Impulse, crawl, look for the buy, right? Then that becomes a buy opportunity for Alibaba as well. Okay, so hope that's clear. Okay, another one I saw was CVX, right? Okay, Chevron. Okay, so same thing, very quick. This is an impulse, right? But right now you don't really get a combination. You need more data, right? So be patient on that. Okay, you want to wait for it to form maybe a correction here, and then that will give you that buy opportunity on Chevron. Okay, so very easy. If you realize that once you understand what's impulse, what's correction, you look at any chart straight away, you'll be able to look at it, put in the analysis, let you know where to buy, where to sell, whether you want to buy now or sell now. Okay, so wait for it. You need to wait, for the setup ABC, something like this, right? Okay, so you need time. You need to give the market time. Okay, so I hope that's clear. Good. Okay, DBS. Okay, so other than that, let me take a look quickly at DBS, right? Okay, good. Now, 4-hour chart, I think is pretty clear, right? Can you guys see what's happening here after this move? Okay, this is a good example as well, right? So you get an impulse. This looks like it's forming a correction. And in fact, what we have over here is 1, 2, and maybe this can form the third move down, right? Okay, so with this here, you can actually put in, all right, your Fib. Let's assume that this is so far here. Okay, then you have a very clear 3-wave move. Okay, and if I want to put in some labeling, that's how it's going to look like, right? A, B, C. Okay, of course, I'm assuming right now price is here, right? And from here, it starts to reverse. Okay, and then this will be a good level to keep an eye on, somewhere around $27. Okay, but at the same time, if let's say the market starts to go higher, then when it starts to come down, you might need to adjust this a little bit, right? Depending on where it goes. Okay, but you get the idea. Okay, as long as this is forming very slow move like that, you get the combination impulse, correction, look for the move to the upside. Okay, so at least from a 4-hour point of view, DBS is up. Okay, so you can definitely look out for that, right? However, on a daily time frame, you want to be a little bit cautious. Okay, because you take a look at this looks like it's forming what we call a crawl. Okay, so you might want to be a little bit cautious on a daily point of view. Okay, so you can trade it for short term, but at the same time, you might want to be a little bit more active in protecting your stocks, so that if let's say from here it decides to reverse and U-turn, at least you are protected from your stocks. Okay, and then of course you can do the trailing technique, and then if price just keep going higher, just protect that. Okay, so that's my view on DBS. Yeah, so hope that's clear. Good. Janice has a question. Is crawl also a channel so price can break below the channel? Yeah, I would say that. Okay. Now if I draw it up, okay, let's say this is an impulse and then this is a crawl. Okay, it looks like a channel here. Okay, of course this can break out. Again, nothing is 100%, but most of the time when you see something like this, there's a higher chance this will come down first and then maybe from there go up. Okay, so that's the higher chance of that happening. Doesn't mean it's 100% gonna come down. Okay, because like this, it can still go up. Okay, there's no such thing as certainty in the market. I hope you know. Okay, so that's the part on it. Okay, so crawl itself is looking like a diagonal, a channel. Okay, and so it can, of course, as I mentioned, like break what you mentioned here. Okay, so I hope it's clear. Good one. Okay, so I'll walk you through some quick analysis over here. You have TME, PayPal, and KE Holdings. Okay, TME 10 cent, right? Okay, good. up. Okay, this is clear also, right? So can you see what's happening right now? You get this sideways move, right? And then after this, you get this impulse. So again, the direction is very clear on this. It's upside. Okay, it's upside. So the idea here is, of course, there are multiple ways you can trade it. You can trade a breakout, as I mentioned, right? Basically, you put a high here. You have the direction. The entry here is to trade the breakout of the previous high. You can do that. Of course, you can also apply today's method of ABC. Okay, that looks something like this. So you can monitor the level of about like $20, $20.90. Okay, I think this is the correct one. Yeah, correct. Okay, so there are multiple ways you can get involved: the breakout of the high or the retracement back to $20.90. Okay, but the direction is very clear, right? Impulse, and if this is a correction, you look for the buy to the upside. Okay, and in terms of target, of course, you can actually multiple ways to set it as well. If today you base on what we cover, okay, then you can look out for this. Okay, obviously, if today you are trading a breakout, then you do not want to put your price target there, right? Doesn't make sense. Okay. If you're trading the breakout, then I assume that you have another way to set your target and things like that. Okay, but for today, if you're trading buying here, your stops here, your reference target is here, your risk reward is there. Okay, so hope that's clear, right? Tencent, very straightforward. The other one is PayPal. Okay, so let's take a look at that. Okay, now PayPal on the daily chart, you can see that this is a strong momentum downside, right? So don't trade it first, okay? I'm assuming that we are more like looking to buy, right? If you're looking to sell, then you can even look for opportunities like the ABC setup to sell it down a little bit, okay? But of course, if today you're looking for, let's say, an investment opportunity into PayPal, then you do not want to do it now. This is an impulse to the downside, right? Okay, even on a 4-hour time frame, you can see the momentum is down, impulse, right? So don't trade it first. Okay, so very straightforward. This is the V shape that we talk about. Okay, so I hope that's clear. Very quick analysis again. The application of impulse and correction is there. Okay. Clifford asked about KE Holdings. Oops. AVR. Maybe you're referring to. Let me see. Okay, I might not be familiar with the company that you're referring to. Okay, for Clifford, I'm not sure which company you're referring to, like KE Holdings. I can't find it. Okay, oh, BEKE. Right. Okay, good. Okay, so again, this is 4-hour time frame, right? Let's go to daily. Okay, so this immediately you can see this company is listed recently, right? So you might not have a lot of data points to work with. Okay, but this here you can see this is a V shape. Okay, let me zoom in a little bit. Okay, immediate move here is a V shape. So you know that you do not want to trade first. Okay, and if this gives you a correction like that, then you have a trade because you have an impulse correction. You look for the upside. Okay, so for now, immediately apply the principle V shape. Don't trade it first. Okay, if this forms a correction here, then you have a setup. Okay, again, back to the combination, right? Impulse correction upside. Good. Okay. If 4-hour chart indicates buy, but daily chart indicates sell, so we should do intraday. Yeah. Okay. So if basically the short term tells you one direction, the long term tells you another direction, then you just be cautious of it. Okay. So take note of it. Okay. So you're right. Okay. Maybe the last one here on the ON by Janice. Okay. Okay, I'm not sure if this is the one you're referring to, right? ON semiconductor. Okay, likely this is the ticker symbol you're referring to. Okay, so yeah, this is again very straightforward. Looking at daily, okay, you have this very strong push, and then this is just going sideways, right? So your combination here is impulse correction. So again, this stock here, technical wise, is telling you upside. Okay, and of course you can utilize like breakout. You can of course still wait for the correction 3-wave ABC. Okay, that looks something like that. Okay, which means that likely from here it comes down a little bit, and then from here you look for entry, your stops, and then your target at the top. okay? Or you can look for the breakout, okay? Because not all the time it's gonna come down, right? Sometimes market just break off after this consolidation, but you know that when you have an impulse plus a correction combination is always high chance upside, okay? So that's where this one here also tells you the probability is to the upside, okay? So hope that's clear. Good. Okay, maybe a last few last few questions to answer because we are running over time. Okay, but I do enjoy answering your questions as well, right? So Ronaldo here asks, what other indicator that will be good match for the setup or impulse and correction? For me, I don't really use any other, but you know, if I'm looking at stocks, I may add in like volume profile, market profile. Okay, and one other indicator sometimes I use for confirmation is basically just our RSI. Okay, so just now, that's why you see over here, when I load up this chart here, you do see my RSI, right? So that's another indicator that I do. Okay, so other than that, not much, right? So basically, volume profile, market profile for stocks, and then RSI for that. Okay, so nothing really much like, you know, custom or things like that. Most of these indicators are already available on your platform, MT4 and MT5. Okay. Janice asks, do I look at moving average? No, okay, I don't use it. Okay, not that it's not useful, it's just that I don't use it. Okay, but definitely you are able to do that. Okay, okay, last one, Apple. Okay, or else there are so many stocks we won't be able to end it, right? So I'll just do the last one for today, which is Apple. Okay, do I have it over here? Oh, okay, I have it. Okay, now I'm personally looking at Apple as well. I think Apple is a solid company that you want to look out for. But on the 4-hour time frame, can you see this chart is super obvious, right? It's just impulse down. Okay, but right now on the 1-hour time frame, let me go back to 1-hour time frame. Okay, there is that little bounce, okay, that you can see over here. But of course, right now you need to wait for that 3 wave. Okay, again, if things are not clear, right, the easiest way is to give time the market to develop. Okay, now on the 4-hour time frame, this is not very clear for now. Okay, you look at this here, it's not really impulsive, right? You want to see really strong move. Okay, so the idea is this can still continue falling, okay, because the momentum here is due to the downside, right? The impulse is due to the downside. So give it some time. Okay, if it's gonna go, it's gonna give you that correction. Okay, if this is gonna go, it's gonna give you this correction. You want to wait for it. Okay, personally, I would not be recommending or even suggesting you even consider selling Apple. Okay, it's just a company with huge solid fundamental. I think the bias here based on just fundamental is outside. Okay, the question is where is a good price to get involved in, so that when you get in, okay, you're at a prime position to immediately in a very short period of time enjoy your profits. That's the idea of it. Okay, so for now, you don't see a pattern, right? So again, you realize that most of this chart, sometimes we have a pattern, sometimes we don't. Okay, if you don't have a pattern, wait for it. Okay, and what pattern we are talking about for today is really just this impulse ABC, right? This is the one that we are talking about, and then from there you look for the trade to the upside. Okay, so I hope that's clear. Okay, you realize that, you know, as traders, is really about patience, right? It's not just trading, but you want to wait for the opportunity to come and then you trade it. Good. Okay, so yeah, so we overran a bit, but I think it's fine. Okay, really enjoy answering your questions as much as I can. Okay, but at the end of the day, I think it's important that you take away today's session and then go and practice it. Okay, you definitely need to put that into practice, because you can't acquire a skill set just by listening. Okay, so strongly recommend all of you to go and take what you actually learned today and apply it into your own trading. Okay, so with that, I'll pass the time back to okay. So with that, I'll pass the time back to the organizer.
All right, Kar Yong, thank you so much. First and foremost, thank you for being a wonderful audience. Everyone was really engaged and was really participating in the questions that Kar Yong had asked. All right, so I hope you have learned how to use the Elliot Wave Principle And also, if you're keen to look for a platform with charting capabilities for all your favorite shares, including Alibaba, DBS, and PayPal, do request an Philip MT5 demo, try out our charting as well as our suite of trading tools. And if you have any questions, please ask them at the end of the webinar where we have a survey for you. And if you're keen to try the platform or if you have any other queries, please make your request known there. And once again, thank you for being a wonderful audience. See you in our next live webinar, and thank you, Kyle.
Right. Bye-bye.
Bye, everybody.